Welcome to the deep dive. We're skipping the surface stuff today and going straight to the source.
That's right.
Today it's all about transformation, specifically in trading and investing. But maybe not in the way you'd typically think about it.
Exactly. We're digging into Van K. Tharp's Trading Beyond the Matrix. Think of it as the red pill for traders.
A red pill, okay.
Yeah, it's about getting a fast track to his core ideas on really reshaping how you approach the markets. And maybe even, more than that.
More than just trading.
Right. Our goal here is to pull out those key insights, those aha moments for you, without you having to read the whole thing cover to cover. We want to give you that structure.
Okay, transformation. That's a pretty big concept.
Yeah.
Tharp isn't just using it lightly, is he? Seems like his mission is bigger than just making money in the markets.
Oh, absolutely. Right from the preface, he's clear. He uses trading as a sort of metaphor, a tool, to help people genuinely transform their lives for the better. And he gives some really interesting examples early on. People like HT in Atlanta, improved trading, sure, but also better business sense, more inner peace. Or TH, who actually reported like a measurable jump in their happiness score. It's not just about the P&L.
Yeah, it sounds like real life changes, career success, even marriage improvements mentioned for others.
Exactly.
Yeah.
Deeper stuff. And he actually breaks this transformation down. He sees it happening on 3 distinct levels.
Okay, let's unpack that. What's the first level?
So level I, he calls it the transformation of the trading game. This is really about understanding the rules you're playing by.
The rules.
Yeah, realizing that the, let's say, commonly accepted rules pushed by mainstream finance might not actually be designed for your success. It's about finding, or rather adopting, a new set of rules that work for the individual.
Which brings us to that title, Trading Beyond the Matrix. That's not just clever branding then.
Not at all. It's central. He's literally drawing that parallel to the movie. The idea is that the reality we see, especially in the markets, is often an illusion. It's constructed, by our programming.
Our programming, you mean our beliefs.
Precisely. Our beliefs about how things work, what's possible, what we deserve. And he argues that taking the red pill is about waking up to that.
So the blue pill is stay comfortable. Stick with what you know, even if it's not working.
Right. Comfortable ignorance. The red pill is choosing to see how deep the rabbit hole goes, really examining those beliefs that shape our reality.
Where do these beliefs even come from?
Oh, everywhere.
Yeah.
Parents, school, church, friends, definitely the media. They all contribute to this sort of mental software we run on. And Tharp's point is you can actually reprogram yourself. First step is just becoming aware of those beliefs and then asking, okay, is this belief actually useful for what I want to achieve?
Okay, so awareness leads to choice, which leads to level I transformation, changing the rules. You mentioned the old rules often benefit big money.
Yeah, that's his argument. He's looking at what you typically hear from, say, the financial news networks or big brokerages.
Like what? Give me some examples.
Well, things like focusing almost entirely on picking the right stock, or the classic buy and hold mantra applied universally.
Right.
Spending hours and hours analyzing every market wiggle, and of course, always listening to the so-called experts.
Okay, I hear that stuff all the time.
We all do. But Tharp says, look, based on his modeling of traders who are consistently successful, following those rules actually leads most individuals to lose money over the long run.
So if those are the old rules, what are the new rules? What's this Tharp think?
Okay, he lays out 4 main ones. First, and this one might jar some people, trading is a profession, a serious one.
Meaning?
Meaning it demands real time, real commitment. Like Malcolm Gladwell's 10,000 hours, but Tharp emphasizes quality practice. It's not a get-rich-quick scheme. It's a skill you develop professionally.
Okay, treat it like a serious job. Got it. What's number 2?
Second, trading results are a direct reflection of your performance. You create your results. Full stop.
Ouch. So no blaming the market manipulation or your broker's platform.
Nope. It's about taking radical responsibility, which then leads to the third rule. Objectives are crucial. You need to know what you're trying to achieve.
And how do you achieve them?
Primarily through position sizing strategies. This is huge for Tharp. It's about figuring out how much to risk on each trade based on your objectives and risk tolerance. Forget just picking stocks. Manage your risk intelligently.
That feels like a major shift from just trying to find winners. And the fourth rule?
Fourth, trading and investing are fundamentally about probability and reward to risk.
Yep.
It's understanding your edge, the likelihood of different outcomes under certain market conditions, and making sure your potential rewards justify the risks you're taking. It's a numbers game, essentially.
So less crystal ball gazing, more like being a good casino manager, playing the odds.
That's a great analogy, actually. Yeah. And really getting these 4 rules down, internalizing them, that is level I transformation. He even has this diagram showing great performance isn't just the market or just your system. It's the intersection of the market, your system, and your psychology, your execution.
Right. And to make this less abstract, Tharp uses a case study, right? Someone named David Witkin.
Yes, exactly. Witkin's story is a fantastic illustration of someone going through this level I shift.
So what was his situation before Tharp?
Pretty typical, sadly. He described himself as inconsistent, basically gambling without real risk management, more losing years than winning. Sound familiar?
Yeah, unfortunately. So what happened after he encountered Tharp's ideas?
It's pretty dramatic. He developed a clear, defined approach to position sizing based on Tharp Think principles. The result: 1 year, he made 130% return.
Wow, 130%.
Yeah, and critically, he did it while keeping his maximum drawdown the biggest dip from a peak under 20%. That shows control.
That's impressive control. What was his background? Was he a finance guy?
Nope, IT consultant. He got interested, like many do, started with fundamental analysis, digging into company reports,
Okay.
then shifted to technical analysis, charts, patterns, and eventually options. But then the dot-com crash of 2000 hit him hard. Big losses.
A common catalyst for rethinking things.
Definitely. That's when he realized, okay, maybe risk management is actually important. Before that, he admitted he didn't really have a system. He called it his caveman approach.
Caveman approach.
Yeah, like see something shiny, hit it with a club, or in this case, see a stock moving, just buy it. No real plan for entry, exit, or crucially, how much to risk. Just impulse.
It really shows you can read a lot, know a lot of theory, but still flounder without a practical strategy.
Absolutely. He even mentioned feeling frustrated, thinking, I know more than these other people who seem to be making money. Why am I losing? It's a common trap.
So what was the turning point for him?
He stumbled across something online suggesting psychology was key in trading. That led him to Tharp's book, Trade Your Way to Financial Freedom.
Was he immediately convinced?
No, actually. He admitted he was skeptical about the whole psychology thing at first. He wanted, the secret formula, the technical fix.
The Holy Grail system.
Exactly. And Tharp's book kind of bursts that bubble. Tharp says there is no single Holy Grail, that you need different systems for different market types, bull, bear, sideways.
Right.
And also the sheer amount of work involved that Tharp described. Witkin found that initially pretty discouraging. He was hoping for an easier path, like most of us do.
But something must have clicked eventually.
Oh, yeah. Despite the initial resistance, certain ideas really resonated, like the fact that winning traders often lose more trades than they win.
That's counterintuitive for many.
Totally. And the importance of positive expectancy, making sure your average win is bigger than your average loss, enough to overcome the win rate. Also, learning to genuinely accept losses as just part of the business.
And taking responsibility.
That was huge. Taking total ownership of every result, no more excuses. These ideas started shifting his whole viewpoint.
And you mentioned position sizing was key for him.
It was the absolute game changer. He talked about reading Tharp's example of a hypothetical trading system. Same signals, same win rate, same average profit loss, but applied to different accounts using different position sizing rules. The final results were wildly different. Some made huge profits, some broke even, some lost everything.
Just based on how much they risked per trade.
Just based on position sizing. That really hit home for him. It showed that how much you bet could be way more important than what you bet on.
So risk management isn't just a footnote, it's potentially the main story.
Couldn't have said it better. Witkin also mentioned Tharp's famous marble game exercise.
Where's that?
It's a simple simulation. You draw marbles from a bag, say. Some represent wins, some represent losses, reflecting a system's statistics. You then bet chips based on different position sizing rules before each draw.
How?
And playing it out physically makes it incredibly clear how different risk strategies lead to drastically different outcomes, even with the exact same sequence of wins and losses. He saw the connection to trend-following systems, which often have lower win rates but big wins when they catch a trend.
Sounds like he also learned the hard way about black box systems.
Yeah, he mentioned trying some systems that promised amazing results, but they failed in real time. Likely curve-fitted, optimized unrealistically on past data. It just reinforced that you need to understand why something works, not just follow blindly.
So after all that, he came back with a simpler approach.
Much simpler. Focused heavily on risk management, always looking for good reward to risk setups, and boom, that 130% year followed.
Even then, he wasn't perfect. He still made mistakes.
Oh, for sure. He was very open about that. Things like not tracking positions closely enough, holding too many correlated trades like multiple tech stocks that all move together, increasing his hidden risk. His entry rules were sometimes a bit lax. He wasn't great at logging his trades. Classic stuff, even after a big win. It shows trading mastery is an ongoing process.
What was his biggest takeaway from that successful year, despite the mistakes?
Two things, really. Finding trades with good potential reward compared to the risk, and using sensible position sizing. He even realized he'd probably risked a bit too much per trade initially, even during the winning streak.
Too much. Why?
It messed with his peace of mind. He found that dialing back the risk per trade actually helped him psychologically and likely improved his decision-making, contributing to the overall success paradoxically.
That's fascinating. So his initial skepticism about psychology kind of came full circle.
Absolutely. He saw firsthand how his own emotions and mistakes could sabotage a good strategy. He realized that becoming truly excellent meant tackling those psychological factors head-on, minimizing unforced errors. It wasn't just about the system anymore, it was about him.
So wrapping up this level A transformation piece, Tharp's core message, vividly shown by Woodkin's journey, seems to be, ditch the old, often misleading market myths.
Right.
Embrace a new framework built on probability, strict risk management via position sizing, and always seeking that positive reward to risk edge. It's about consciously taking that red pill.
Exactly. Seeing the game for what it is. Understanding that making money consistently isn't magic, it's math and discipline. It's about managing risk so your statistical edge can actually work for you over time. Getting that, well, that's a massive advantage.
It really shifts the focus, doesn't it? This whole deep dive into level I has been eye-opening. It really makes you pause and ask yourself, what rules am I playing by right now? Are they serving me? What beliefs might I need to challenge to see a different reality in my results? Definitely gives you something to think about.
For sure. And if this resonates, digging into Tharp's trading beyond the matrix directly would be the next logical step. There's obviously much more detail there.
Absolutely. Well, thanks for joining us on this deep dive into Van Tharp's level I transformation. We'll catch you next time.